I'm your host on Insight Vietnam. Hello everyone and welcome back to the show. My name is Phi Nguyen and I'm your host on Insight Vietnam. I'm inviting you to the suite of the Caravel Hotel today to enjoy a panel discussion on private equity investment in Vietnam. Private equity investment in Vietnam remains a significant driver behind Vietnam's economic growth. However, private equity investors are currently looking towards Vietnam with a little less confidence, but still with an optimistic view. This is consistent with the uncertainty in Vietnam's economy at present, as difficult macroeconomic decisions have dampened domestic growth. To what extent is Vietnam still seen as an attractive destination for private equity investment? Let us find out the current status, the challenges, as well as the opportunities for private equity investment in Vietnam with two excellent panelists today, Mr. Kenneth Atkinson, Managing Partner of Grant Thornton Vietnam, and Mr. Nikhil Singh, Principal of Indochina Capital in Vietnam. Greetings to you, gentlemen, and thank you very much for being on the show today with us.
You're welcome.
Probably the first thing I would ask is, what is the definition of private equity investment anyway, so that we're on the same page when we talk about it?
Okay. Well, there are several definitions of private equity. The one I like is where we have a privately negotiated investment in equity or equity-linked securities. That's the definition I like. So it can include privately negotiated investments in public companies as well. There are some investors that exclusively define private equity as investments in unlisted companies. Okay? But generally in private equity you have two main types of investments. You have growth investments, investments to finance the growth of a corporation, or you have buyout transactions where you have the classic leveraged buyout, essentially taking a majority stake in a company, largely financed by debt, low-cost debt, to take control of it. So,
with your definition, what would be more logical to Vietnam?
In Vietnam, it's all growth equity. You don't have buyouts for a number of reasons. One being, ownership limits. There are caps on the ownership of companies at about 49%. That's one main reason. The other huge reason would be the cost of debt, right? And the availability of debt as well. In the US, towards the top of the bubble, also in Europe, you could finance, 70-80% of a transaction with debt. The way it's measured in private equity is in multiples of EBITDA. Maybe I'm getting a bit technical here.
That's okay.
The debt to EBITDA ratios went up to about 7 or 8 times towards the top of the crisis.
But I think it's true in Vietnam, most of the private equity deals are done on the basis of equity or convertible debt. There's very little leverage in transactions in Vietnam. And I think there's also some confusion in the market when people refer to what I would describe and what Nikki's described as private equity deals are described as M&A transactions, and M&A is really when there's a total buyout or a majority stake is purchased by a buyer.
There is something like a vague definition of M&A and equity, private
equity
investment in Vietnam.
Well, I think things tend to generally get lumped into it's an M&A type, it's an M&A transaction when in fact it's really a private equity transaction because it involves a minority stake and not a majority stake.
Just on the back of Ken's comments, I would just add, we've got to clearly distinguish here between financial investors who, are holding this investment for a short period of time, with likely exit in whatever 5 to 7 years, versus strategic investors who generally will add this to their global portfolio of investments. So.
Okay, before we talk about the challenges and opportunities of private equity investment in Vietnam, I'd like to give the audience a bit of an overview of the current market situation. So I read one of your reports and it stated a number of $1.8 billion in terms of private equity investment since 2003 up to 2010 for some of the participating funds in the survey. What is your impression towards this figure, and what are your thoughts on the actual market value in terms of private equity investment in Vietnam?
Well, that report focused on the fund managers who have specific funds raised externally, but for investment primarily into Vietnam. So there are half a dozen fund managers with funds under management, Vina Capital, Dragon Capital, Indochina Capital, and a few other smaller ones. And that survey was conducted amongst those players in the market. There are, of course, significant regional funds and global funds that also have a portion of their portfolio allocated to Vietnam. So it was probably, I don't know, representative of maybe 60 to 75% of the market.
What do you think about that, Nick?
Yeah, that number to me looks more like the total wallet size, kind of the funds that are available versus the actual transactions done. It looks a little bit large to me because we log nearly every deal. We'll have to go back and run some of those numbers. But I'd be surprised if it was that amount.
Well, they were actually investments that were made by those funds.
Okay.
Their funds under management are probably closer to 4 billion. So I think that number was actually fairly accurate from those fund managers.
And there is a hike in 2007, though, in terms of number of transactions and value. Why is that?
I think the market was just very hot, and everything was going up in value, and people were, there was a lot of liquidity in the marketplace, and people were, if you like, jumping on the bandwagon. The funds were going out, and it was easy. They spent the money they'd raised in the previous closing, and they were able to go out to the market and raise another 100, 200, and in some cases $500 million, and they were looking to get that invested as quickly as possible.
Yeah, they say there's a wall of money that surfaced in 2007, and there's limited supply, and so valuations, trades crossed at very high values, and so the valuations were high.
And it doesn't go on until 2011. I can see a very sharp decrease. Why is that?
Well, I wouldn't necessarily agree with that. I mean, the market's changed in the sense that it's very difficult for private equity funds to go out and raise new capital for investment. But we are seeing quite a high level of transactions at the moment. Since about last November, we've seen a fairly significant pick up in the market. We're not back at 2007 levels, but we're not too far away, certainly in terms of our own deal pipeline that we're working on with investors.
Well, I would just add that this kind of follows a global pattern, pattern of fundraising, a global pattern of number of deals, value of deals, especially for fundraising, which is down about 75% from its 2007 peak. Still.
Is it only in that perspective, or is it also because there is a limited pool of good companies in Vietnam to invest in?
No, I think if the money's there, fund managers will always find investments.
That's a good point.
That's what they're paid to do.
And Nikki actually mentioned there is a cap on for foreign investors in private equity investment of 49%.
That only applies to investments into listed companies. There are some restrictions on certain sectors like logistics and travel agencies, real estate, telecoms. But generally now, foreign investors or private equity funds are able to take a majority stake, even up to 99% of ownership of local companies.
Yeah, I think it all depends on the structure. It's achievable. Yeah.
What about the sources of PE investment into Vietnam? Where do you get the money from?
Where does the money come from? Well, we've seen that kind of evolve over time. I guess in the first phase of Vietnam private equity, which I would kind of call pre-2007, a lot really came from the Development Finance Institute. So it was kind of like development money coming in, also some money from wealthy individuals, and then going into phase two, which around 2007 to 2009, that period. I'd say you had more interest in fund of funds coming in, and now going into this third phase that we're in, we're seeing, more, financial institutions, traditional pension fund investors, etc. So it's kind of a nascent market.
But we did, I think from 2005, we started to see people like Vina Capital and Dragon Capital and Indochina Capital starting to raise, fairly significant amounts of money from the global market, but from institutional and private investors.
But here again, I'd kind of differentiate. These what I would call broad funds, not pure private equity. For example, if you look at the Vina Capital or the Indochina funds, we just have about 30% of the allocations in private equity. Vina Capital has a lot in real estate as well, and just a small portion in listed. So these broad funds, they worked in that in that period, but we don't really see many of those anywhere in the world anymore. Yeah.
No, their liquidity is dried up. So they're continuing to make new investments through exiting of existing investments.
Has private equity been always one of the key focuses of the funds here, or has it only been becoming one of the major avenues for generating revenue here in Vietnam?
Okay, the way I would answer that question is, all fund managers had to look at the space because there were so many unlisted companies previously. Now that where the capital markets are deepening and there are more and more listed, there are almost 700 listed companies, you see more specialization. So you have more specialist private equity managers emerging in Vietnam. So that's how the development is occurring.
But then quite a few of the funds have specific public market money, so that they have, like Vina Capital has Vietnam Opportunities Fund, which primarily invests into listed companies. So they do have segregations within their funds.
That's where the money is coming from. What about the money divesting into different investments in Vietnam? Where does the money go? Into which sectors?
Well, again, that's very much depending on when we're talking about time-wise. If we talk about 2006, 2007, there were large amounts of money going into real estate development. Today, there's nothing or very little going into real estate. Today, flavours of the month are really education, healthcare, agriculture, manufacturing, and infrastructure.
How do you see that?
The Asian consumer is the hottest global theme. So a lot of money will continue to go in there. And within that theme, I would say food and beverage is one sector that is particularly hot. And, as I make my rounds, regionally, this is the one subsector that investors are most keen about. It's a very basic theme. And
what about education, as Ken mentioned? Is that something?
Education's great because it's defensive, and yet you have growth. So you have that unique combination of growth and defense, which is kind of hard to find in many markets. So there's a lot of interest there. But there are very few kind of platforms, and the size of investments, there's quite limited.